It's Thursday, December 16th, 2021, and today we have a very special episode. We are taking a look back at 2021 and asking ourselves, what were the biggest trends of the year? Is Alex Norman psychic? The predictions he got right and wrong in 2021. And what did the TechTO community read, watch, and listen to this year? We'll reveal the highlights from our best performing content in 2021. So let's get started. What were the biggest trends of 2021? Big VC and Big Valuation comes to Canada. Canada rides the NFT and Web3 trade, and fake AI is out, real AI is in. Alex, let's talk about each of those, starting with Big VC and Big Valuations.
Well, that one is a topic we almost talked about every week, it feels like. High level, you had new players in the Canadian ecosystem, particularly Tiger over the last, let's call it 4 months. SoftBank has written checks into the e-commerce system, and we've had more unicorns this year than I think the last 10 years combined, if not longer. So lots of money being invested in this ecosystem, lots of high valuations.
So what is it? Is it inflation?
I think, look, it's inflation and values. It's money looking for a place to go. Like Tiger wasn't investing like 18 months ago in venture, and they've raised 10 or 15 billion to invest. That's a lot of money to be deployed, and they'll go globally for it. I think it's an also recognition of the maturity of our ecosystem, where you have companies can scale, and there's talent here, and we're attracting people. So this is all the good things that have been going on for more than a decade are starting to pay off with larger companies attracting global money and getting higher valuations.
But is this a Canada thing, or were big VC entrants and big valuations more of a macro global trend?
I would say it was a macro trend that has existed for a couple years that had sort of ignored Canada. So we're late to the game, but we're catching up fast, and we're growing probably, if I were to do the numbers, which I haven't. So huge caveat here. This is my assumption, like usually being fact-based, is that we've shown faster exponential growth than other countries. Maybe India has been a bit as hot as us this year, and other countries have taken a step back. China, for lots of government regulations, China's always had mega unicorns or decacorns or centacorns, but this year they produced many this year, but probably a slower trend than the past years versus us. Like this is unprecedented.
So you mentioned Tiger, the big VC that came to Canada. SoftBank came to Canada this year. Which big valuations stick in your mind from this year in Canada?
Well, if you can go just pure valuations as Fair and Dapper.
Mm-hmm.
I'm trying to think who, Cohere is not a unicorn, but got pretty high valuation, pretty off. You got to go with Wabi also, a seed round she raised $100 million. So even, I don't know if the valuation was 300, 400, 500. For a team and maybe an idea in a team, that's pretty rich compared to what we normally see here. How about for you? Any stick out in your mind?
I think you mentioned a couple of the big ones. And you also mentioned some of the trends that we're going to tackle in just a moment around NFT, Web3, and real AI. Were there also we talk about big VC and big valuations. Was there also some surprises on the earlier stage rounds? I mean, I know you spent a lot of your time thinking about the seed and getting to Series A. Were there things that you saw there inflated too?
Well, I think you've seen more of a K-shaped seed or pre-seed or early stage I think you can look at anything pre-product market fit or pre-attritional A and everything after attritional A. And why I'm saying traditional A, you used to have product market fit. You don't necessarily have that. I think if you could get to product market fit, the valuations are generally high. Pre that, when it's more traditional venture, will this work or won't this work? And just let's be clear, just because you have an A doesn't mean you're going to work. If you were a repeat founder that was well known, who was tackling a space that people are excited about, you could raise basically any valuation you want within reason. Again, like I'm talking about like a 5 million on 20 with a deck. And if you weren't in a hot area, you weren't a founder that people knew, it was harder to raise in previous years, probably.
And do you think that continues into 2022?
Well, everything or just
this trend?
Just the seeds? Yes and no. I think the case is going to continue where there's certain founders that can just go put out their hand and raise easily. They're going to be the minority. I think you're going to see a bit of compression valuations, but again, I probably predict that every 6 months. I think it's going to get a bit easier for a few of the unknowns and unpopular areas to raise, just because I think I'm seeing one of the benefits of all these high valuations, a lot of secondaries, a lot of people have had taken money off the table. So we now have probably 500 more operating angels that can write checks and take more risk than. So there's people, actually more people writing checks at early stage than there was in the past.
That's amazing news for the ecosystem. Let's talk about a second trend we saw this year, which was Canada riding the NFT and Web3 trend. Tell me what we saw coming out of Canada in this
So,
space.
and I want to say something unpopular here. I think this was a Vancouver trend more than anywhere else. I think, and it is probably anchored by the Dapper crew. Dapper Labs, which I think we first had in Tech Vancouver, I think in 2018.
The
When they
Crypto Kitties
Yeah,
clan.
Crypto Kitties. They were part of Axios, and they spun out, and they went quiet along with like NFT or Crypto Winter. And what they were doing is they're building their own blockchain called Flow to make it more consumer friendly. And they they launched Top Shots. You may remember them, super hot basketball related IP. Instead of getting basketball cards, you can now get a basketball NFT. They took off along with the rest of the NFT market, and Dapper Labs just continues to be a behemoth. They keep on growing and growing and raising at higher valuations. And what you're seeing is a lot of Web3 companies coming out of, and particularly Vancouver, because there's an ecosystem to support it, even though this can hypothetically be
And you
distributed.
think that they're the ones who have really anchored that ecosystem?
I'd say them. I'd also give credit to version one, in particular, Boris, who may not invest a lot in Canada, but has lots of credibility because he's there and he invested in Dapper. And like, look, it helps if you have a company that's worth $7 billion or whatever they're worth right now and has a few hundred million. I think my guess is behind the scenes they're funding a lot of these new companies.
Interesting.
The
Um,
one was Barada, who raised I think $7 million this week.
and so do you have like in some of the big companies have a bit of like a mafia where they support each other as they go and do new things? Have we seen like the emergence of like a Dapper Labs alumni fund where people are
Oh,
funding people from the ecosystem?
it's too early.
Too early. So what do you think is going to happen into 2022 with this trend?
In Vancouver are generally NFTs and
Start with Vancouver, broaden it to Canada, and then if you want to do something big, you can go big.
well, look, Web3 is here to stay. So it's still in its infancy. It's still in the first inning. It may not be, the valuations may not be as hot next year, but I think you're going to see more and more companies incorporating Web3 elements or being Web3 first companies.
Mm-hmm.
I think Vancouver has a head start, but I think it's going to go across the country. And will NFTs cool off? Probably. Will DAOs pick up? Probably. But I think that's more has to do with macroeconomics and where people want to put their money. And I just think we've now got a strong leadership out of Vancouver, and we do have lots of talent here. Like in Toronto, we have Ethereum, founders. You have you have Matt Spoke, who is part of Aeon and Nuco, and Vancouver. And if you believe that games are going to be part of the Web3 revolution, Montreal is in a good position because they're a leading gaming city. So I think it's going to spread across the country. You're going to see more exciting things.
I love that. Alex, what NFTs do you own?
I've played with a couple. Uh, I've dabbled with chain runners. I bought one and sold it a minute later, and might buy it again. How about you, Jason? Do you own any?
I think we need to change your avatar to be your Chain Runners NFT. What do you think?
It looks better than me, so maybe.
Yeah, well, that's
It's pixelated and it's
a low
you know,
bar. All right. One of the other things you spoke about, Alex, this year as a trend was fake AI is out and real AI is in. What does that mean?
So I'll reposition that as just like every technology, and I think this might happen with Web3, is when new technology comes out, it gets hot and everyone wants to adopt it. And then you have a lot of companies that start saying, hey, we're built on this. So go back 10 15 years, we're mobile first. We're the mobile first travel company. And then there'd be like mobile, we'll help you do with mobile. So, go back 4 years ago in Canada, Canada's considered a leader in machine learning and, NLP and AI. And there's a lot of AI first companies like Element AI, which was basically consulting service. And a lot of those sputtered out. They were too early. They had nothing distinctive. They were just trying to like put AI at the end of every sentence. Now you've got a lot of companies that have learned how to incorporate either leverage AI as a core differentiator for their product. So I'd even argue Hopper has benefited a lot from this. Their ability to figure out what products to price and how to price them is made them a winner in travel. And then you've got companies like Cohere, which are saying, hey, you know what? You now know that AI and machine learning has to be part of your business. will enable you to do it. So they're not doing consulting. They're using a technology layer to bring AI to your business. And you're seeing a lot of those across Canada because we do have the talent here. And I'd even go like, what going back to one of those big companies, Wabi. Uh, autonomous vehicles are built on AI. Everyone just said we're going to build autonomous vehicles, didn't understand the rules and regulation. You saw a lot of those basically put it away. And now you've got the new generation of companies that are saying, okay, this is how it fundamentally changes the way vehicles move. So a lot of innovation. We've got the cycles. You're going to see where it makes a core difference on building a business that couldn't be built off the first generation of AI company.
That is exciting. Thank you for those recaps of the 2021 trends, and excited to see how they continue into next year. Now it's time for one of my favorite segments of the calendar year is Alex Psychic. We're going to look back at some of your predictions and see how you did, starting with the Canadian reverse brain drain. Back in May, you predicted that Canada would grow the tech talent pool faster than the US. Did that come true?
Well, we don't have numbers yet. So everything I've seen says yes, but I think our lead has fallen. And I think it's because we've been much more conservative with allowing people to move around this country. Don't want to get into politics, but I think we're going to be back in a lockdown, and versus the States has been open for business. So we've lost our edge in a weird way in our borders, and more teams have gone distributed. So I think our growth is still faster because we're off a smaller base, and we're just graduating great people, and people want to come here. But it's been dampened by an ability to keep our borders open, and by teams going distributed. Because and also the rising cost of talent. So I hear a lot of companies now looking to hire people abroad because they just can't. We can't produce talent fast enough. So my guess is when we see numbers for 2021, we'll see fast growth. It'll probably be in the top. We'll probably still be in the top, 80th percentile or higher, but it'll be slower than the last couple of years.
All right, so we will be looking out for that. Now, if you are part of the Canadian tech ecosystem, you're a founder, you're hiring, you're a scaling company, you're hiring, you're really anybody hiring. What does this news mean to you?
Well, you better be willing to pay more for your talent, and you probably need to think more creatively how you build your brand, make yourself a more attractive place to pay. There's two ways to get talent. People want to work for you because you're doing something cool and you've got a strong employer brand, or you're paying the most. And you might want to look at building a distributed team.
And then when you were building your company, Alex, back in, I don't know what it was, the 30s or the 40s, what was your strategy? Was it employer brand or pay top dollar?
Neither. You didn't have to do either. I wasn't smart enough to do an employer brand, and didn't have the money to pay top dollar. So it's not, my strategy was actually hire the right people so I could pay. I pay. So instead of I think every team tries to fill up 30 positions. I said, okay, these are the 10 positions that make a difference for us. Let's pay top dollar for them. Go recruit the best, and then make sacrifices everywhere. I'll either have a smaller team or have less people. But very different market. I wasn't, nearly as experienced then. So,
and if you were operating today with all that hard fought experience in the battles that you've won and lost, what would you do?
Well, I'd focus on building my employer brand before I even started the company. So I think luckily that I have a bit of a personal brand, whatever that means. But some people might want to work with me for some reason.
Maybe not after this segment when we disprove all of your predictions.
Yeah. And so I start with the employer brand, start with the mission. Why should you be excited to work with me? And then I'd pay top packages, and I'd actually focus on helping people understand the option value of what they're getting. Because I think Canadians still don't understand optionality. Yes, it's not guaranteed pay, but I think I'd make it top of the market package, including the value of the options. So I get people that are excited for the mission, excited to work as a team with us, and see the big financial upside if everything goes well. And
I like that.
And focus on a smaller team rather than a large team.
I like it. So I think prediction came true, but it is slowing, and we'll see what happens going into next year. The next prediction you made, we were talking about the Canadian gravy train. So earlier in the year, you also predicted that the big VCs and the big valuations in Canada were going to cool down. Did that happen?
No, definitely not. I've probably been predicting this I'll get this right one half of 1 year, because I'll predict it again right now. Look,
a broken clock is right 2 times a day. Is that right? That's what you're going for here?
But also valuations can't just keep on going up. Unless our company's keeping outperforming everyone else, right? You saw England raise interest rates yesterday by 15 basis points, the first G7 or G30 company to do that in 2 years. Look, maybe we're going to shut down for another 3 to 6 months. I hope not. And maybe we'll keep interest rates low, but eventually interest rates have to go up and there'll be a few big blowups. And then that tends to scare the market. There's cycles here. I don't believe the cycle's completely disappeared.
I mean,
And
you've lived through a lot of cycles, old Alex Norman.
yeah, used to have full set of hair 25 years ago.
So this is interesting. The first prediction, you got half right. This one you got wrong, and you're sticking to the prediction. I'm curious, how are these two related? How is the reverse brain drain slowing and the gravy train continuing linked?
The gravy train has look. If VC stop funding startups, there won't be jobs, right? So we'll probably have less need to import. Salaries will fall, so it'll be less attractive. So it will definitely. If let's say we go to extreme, venture winter, where valuations drop 30-40% and only half the companies get funded, just less demand, people start looking at other jobs. So growth may not go to zero, but it will slow down. The flip side is too much funding is probably bad too, because now we have a shortage of supply and prices are going up. So now people start looking at hiring abroad. So, there's probably Goldilocks situations for the growth of our tech talent from, at least from a demand perspective. But either too hot or too low in valuations will hurt the growth of overall tech ecosystem.
I mean, if you're building in the Canadian tech ecosystem now, do you have to change anything, or you focus on building a good business? Is there anything you can do to prepare for this stuff?
As a founder or as a government or
as a founder?
As a founder, look, the fundamentals of building business never change. Build a product that customers love, create a lot of value, capture some, and make sure that no one else can compete with you.
So easy.
Not hard to execute against whatsoever.
Now, you mentioned, what about advice for the government? Now, this is a funny thing, because I know that you have mentioned a few times you're not a big believer in these programs and them getting involved in how we run these things. So what are you thinking in this case?
So I think we need to spend less money to support the tech ecosystem. So and I'll get probably lots of nasty emails. Like Shred, IRAP are nice, but I think are not needed in this environment. And it could save us money. And I think what we could do is the government should create clear regulations to promote innovation and rules. So a perfect example, what works well? Easy to immigrate talent and engineer. What else would work well is, hey, we have new technology like drones. What is a framework we can try and work in? Give us a sandbox to work on it. And let's be open to learning and creating leading regulation so there's certainty. Because the things that kill ecosystems is when you don't know if you can operate. And I think with Web3, there's a lot of questions about cryptocurrencies and technologies, what's allowed, what's not allowed. You're going to see that we're going to have, I think there's going to be tons of automation and robots in factories. I think there's going to be drones. There's going to be autonomous vehicles. If we, instead of subsidizing these research, we should be creating ways for them to work with the different stakeholders and create regulations. I don't say get carte blanche to go, but government's proactively saying, how can we make this an attractive place to build your technology?
I like that. And of course, the very first step of that is banning all robotics from the sidewalk.
No comment. No. Look, we'll know Friday if that happens in Toronto or not. They're going to vote.
Next, what trends did you think, Alex, were going to accelerate or reverse due to the post-COVID reopening? So this was back in July. You were predicting that some trends would continue and some would fizzle out in September when things were reopening. Let's talk about those trends. Here are the ones that you thought were going to continue: entertainment, e-commerce, and health tech. Did they?
So, and ESG. So ESG is definitely is gone even hotter. Health tech, I would say overall, there's still a lot of health innovation, a lot of stuff around mental health. The one thing that's probably fizzled a bit there is telehealth or video health, because there's just too many providers and some people, but and depending on the
jurisdiction, just a low barrier to entry. So the ones that were already established did well, but then everyone else came online.
Yeah, but yeah. So within that, health is still going up, is one of the fastest growing categories in tech, but there's some that have softened. And again, it depends on your jurisdiction. It's still pretty hard to see a doctor in person in Ontario.
Yeah.
Entertainment, I'd say, continues to grow. E-commerce has had a bit. Apparently, people like going shopping in person. Again, depends on the category. If you're doing ghost kitchens or sorry, grocery stores.
Yeah.
Those are going through the roof. Or like, we had Good, who's related to that. There's a lot of funding. There's a lot of money there.
Sure.
There's Tiggy in Vancouver, and Kiwi Me in Calgary.
Yeah.
Consumer fintech. Well, I don't think we're ever going to see that slow down. So those ones, I'd say, let's say there's 5 of them. I'd say 4.5 out of 5 are still going strong.
Okay, so you nailed that one. We give you a point for that. But here are the ones that you thought were going to fizzle out: the creator economy and distributed work. Did they fizzle?
There's a couple more there. Distributed work, I think it's too early to tell. I'm hearing a lot of pushback on it. I'm hearing lots of companies that want to open offices. I met with a few founders in person this week, and all of them have got new offices and saying that they don't believe distributed works. I think some companies are more distributed. I think, who knows, because we're still in some sort of lockdown, so people haven't seen it. I think there's been hits in the space, but like Zoom, look at the valuation of Zoom, it's down. Look at so there is headwinds there.
Yeah, but Zoom's facing a lot of really innovative up and coming competitors. I mean, that's got to put some pressure on their valuation too,
but
right?
like even Hopin, Cvent, the big comp that went public, was supposed to be valued at $5 billion, so at 400 million market cap. So there is pressure there that's saying that maybe the valuations and the money got ahead. Maybe it's still a trend that's continuing. The creator economy, I'm not sure, because like if you believe in what's going on with Web3, there's a lot of money going to creators. But is a Substack as valuable and popular as it was a year ago? So maybe it's gone through another revolution. I don't know. What do you think?
we've got Miss Excel now.
Yeah, well,
That
I know you're a big
you,
subscriber.
Alex. That could have been you.
The other one we had there was experience consumer apps. Like that's definitely taking a hit. Food delivery, actually, despite people wanting ghost grocery, food delivery apps have slowed down. Fitness, do we need to talk about Peloton? Like even Sex and the City's reboot dunked on them.
Wow. Yeah.
And then I said, commerce prop tech. I'm not sure. I don't have enough data.
Okay, so Alex, I'm going to rate your predictions 2.5 out of 4. That's pretty good in a lot in your industry. That is world-class performance.
Thanks.
That was pretty generous there on the scoring. All right, Alex, if you want to hang out with the TechTO community to talk about what predictions you're going to make in 2022, you got to come and join us tomorrow at noon Eastern, 9 a.m. Pacific, with the team at Blockthrough and angel investor Roy Pereira. Alex, why should people tune in tomorrow?
Usually we talk with VCs. Here we're talking with an operating angel and a founder that didn't have immediate success. They had to do consumer research, sort of do a couple pivots. So it's good to see how a good operating angel can work and help with a company with.
And you said there's a lot more operating angels out there in the market now.
Yes.
So it's a good one for them to tune into as well. And then finally, Quick Takes is going to be taking a short break over the next few weeks, but we will be back in January at an all new time.
Jason,
right,
but I thought we were doing a Christmas marathon. I mean, you were going to do this for 6 hours.
There's no Christmas marathon. No way. Tune in Thursdays at 11 a.m. Eastern and 8 a.m. on the West Coast or in Cryptoland for all the Canadian news you need to know. We will see you in January. But first, we're going to do a little wrap up here, a little TechTO Wrapped, the best content from TechTO in 2021, breaking down all the top content that you watched, listened to, and read from the past year. Now, first, YouTube was really hot for us. Alex, the TechTO community watched 415,000 minutes on our channel in 2021. That's almost a whole year of watching. You agree with this? You go, okay, that makes sense.
That makes sense. And it wasn't even my kids. So I'm just trying to,
yeah, I know. Okay, so our top video of the year was a founders and funding conversation that you had with Boast.ai and Galvanize. It had tens of thousands of views. Why do you think that was the most popular?
Well, you had a great story there about how Galvanize basically went from a startup to an exit. You had Lloyd, who's built Boast. So an investor, and a founder that both had success, both are well known, and a lot of lessons were shared.
I love it. And has anything happened with that story? Like, I guess, have we followed up with Galvanize post exit? How are they all doing over there?
Can't say I have. Have you, Jason?
No, I think that might be on our 2022 list. We should follow up with our top performing stories of the year. We also had a hit in a video titled Digital Innovation in Pharma Marketing. That was featuring Dorothy. What do you think of that one?
Well, I guess people in pharma want to know how to digital market. I guess they're just getting to the game. Like you can't. I guess everyone switching off TV is no longer seeing those, 30-second pharma commercials with 25 seconds of warnings. If you get this, you may die and have a heart attack. And so I assume that that's an industry that's learning to use digital marketing.
All right, and I think that one is going to keep growing. Part of your trend that you said sort of fizzling out a little bit, but might come back real strong in 2022. Alex, this year, we also did a ton on the podcast front. We launched 4 series. We launched Quick Takes, which you'll listen to right now, Founders and Funding, Rocket Ships, and Tech Together. And all 4 of those series are available wherever you listen to podcasts. And this community absolutely loved them. Listen to our shows. I think it was over 400,000 minutes again. So again, getting close to almost 3/4 of a year on this one. And our top podcast from the year was an episode of Quick Takes, the end of Easy Money. Why do you think everyone loved the prediction that you got wrong this year?
Well, I don't think they tune in for that prediction. I think they love Quick Takes. I think we're trying to look at the news that's happening in Canada and give some analysis and thought behind it. And so when people have some time and this is what I assume this is what they do when they jog or get on their Peloton or on their lunch break. So I just think Quick Takes is generally being well received and people like watching it. What's your thoughts here, Jason?
I hope so. It's fun to talk about the news and not just know it, but understand the why behind it. And I think Alex, you're doing a good job delivering the why and what it means for founders in Canada. Now, we also crushed it on the email front, Alex. Our email service provider must be wheezing because we sent 167 campaigns to over 5.6 million recipients, and you guys loved them. And it's one of the number one click category click. Do you know what it is, Alex? What are people clicking the most in the newsletter?
On Fridays. Or
Yeah,
not, I guess that's...
What are they clicking?
I don't know. Quick Takes?
They're clicking on Quick Takes.
Woo!
So if you're listening right now, you probably found us from the newsletter. Thanks so much for opening the newsletter, for reading it and clicking on Quick Takes. There are a couple other categories that people really love from the newsletter. Any guesses?
Probably jobs.
Love those jobs.
And probably the spotlights on up and coming companies they should be knowing about.
Absolutely nailed it. And so 2022, Alex, it is going to be more videos, more newsletters, more podcasts, and hopefully more in-person events. I think we snuck in 4 this year, 2 in Toronto and 2 in Vancouver. And we'll see what happens over the break to see if we can run a whole series next year, monthly in Toronto and bi-monthly in Vancouver, and take the show on the road. Lots of people now listening to us, not just in the downtown metro areas, but all across the country. Alex, where do you think we should take the TechTO show to in 2022?
I think we should go coast to coast from Victoria to Halifax.
Let's do it. Let's get a one of those. What are these motorcycles? Those electric motorcycles in Vancouver called?
I think it's Damien.
Let's get one of those, and let's get Alex on the hog cross country.
I was gonna get an electric VW van.
That sounds good. We'll do a conversion on a Westphalia for you. Oh my goodness, what a year in Canadian tech. And if you haven't already, you've got to like and subscribe to TechTO wherever you're watching or listening so you get all of our 2022 content. And we will see you next year on The Inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea. So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.